and welcome to Morning Trade with Moneycontrol in association with M Stock by Mirai Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. So please keep commenting on our live feed and we'll have them addressed during our interaction with the technical analyst. But before bringing him on board, let's see what the global handover looks like. Mixed cues coming in from Europe. Stock 600 was up about 0.6%, having trended up more than 1% earlier in the session. FTSE and DAX ended over 0.5% higher, with CAC closing in the red. Stocks closed lower on Wall Street as well after posting their first weekly gain since May. Investors will also watch June consumer confidence and home price data for the month of May, which is due to be released later today. Shares in the APAC region mostly declined as investors weigh economic concerns. SGX Nifty also indicates a flattish to moderately negative start for the market. In the spotlight today are Sterling Tools, Brigade Enterprises, Capri Global, and we also find out if FMCG stocks will find any relief from easing commodity prices later on the show today. Kunal Shah of LKP Securities is with us today. Kunal, expiry week and lots of action happening. Last night, the cues were not very encouraging as far as the global markets are concerned. What is it that we should brace ourselves for today?
Good morning, Karunya. I think looking at the markets where the volatility is very high, that is what the trend is and which is likely to continue in the near term as well. Now, what has happened in the last 2 to 3 days, we have seen a good rally on the Nifty index. That is from 15,400 zone to 15,800, 900 levels. Now, the vis-a-vis this point we have to look at is the India VIX. India VIX, if the market rallies, India VIX has to come down or it has to cool off, but that has not been the case. So which clearly indicates that the volatility is likely to be there even in the June series and specifically for the expiry week. So expect the volatility to be there. On the downside, 15,400 is now base support from where we had seen a breakout and the Nifty rallied on the upside. On the upside, 16,000 is the level where the resistance is clearly visible because again, this is the strike where the highest open interest is built up on the monthly expiry as well. So 16,000 is definitely going to act as a resistance on the upside. If we breach that, the next level, what I see is 16,200. To remind you again, we are still trading in a downtrend. That is a lower high, lower low formations are still intact. This is a pullback rally, what we have got for the Nifty index. So that could end around 16,000, 16,200 zone, which I'm expecting. On the upside, if we sustain above 16,200, then I can say the downtrend is over and we can see further rally on the upside. So my view from the current level remains range bound, but in this range bound view, I will suggest for today's trading session, one should keep a buy on dip approach. 15,800, 700 is a immediate support zone for the index on the downside. So one can again have a buy on dip approach and look for targets of 15,900 to 16,000 on the upside.
Okay, all right. Let's also discuss a bit about the stocks that are likely to be in the spotlight today. Of course, the breadth of the market has been looking fairly resilient, but there are some mid-cap stocks which could be in the limelight on back of news flow. First up is Sterling Tools. Its arm Sterling G-Take E-Mobility has forayed into E-LCV segment. In fact, they've started supplying already to a two-wheeler customer, and this happened a year ago, and now the company has confirmed that they have orders from more than 10 customers. So some positive news flow coming in there for Sterling, and in fact the stock has yesterday itself it was up a phenomenal 9%, and in the last 2-3 months as well, from the lows of 120 rupees which we saw in the earlier part of May, the stock has quite sharply gained. Is that upward momentum something that people can bet on, can expect to continue?
See, if I look at the Sterlite Technology chart as well, the stock had seen a massive correction from the levels of almost 300. The stock had corrected to somewhere around 150, 160 zone. So I think that is where the pain is. The stock is still in a downtrend. We are there in a lower high, lower low formations which are still intact on the downside. So I don't expect significant recovery from the current levels. It might test the resistance zone on the upside somewhere around 180, 175 zone. That is the max what I can expect it from the current levels. So I don't expect aggressive upside, but yes, from the current levels, the risk reward is favorable on the upside. So one can buy at the current levels as well.
Okay, all right. I also want to flag off a Capri Global Capital from the BFSI space. Some fund action has taken place there. APV TradeSol has offloaded about 2.05% stake in this company. So, for APV TradeSol and PACs, they've sold combined that 2.05% stake that I'm talking about via open market transactions, and now their combined shareholdings is at about 6.1%. Talk to us about Capri Global as well, because the 1 month chart looks quite interesting and quite upbeat, but is that momentum likely to continue?
Sorry, the stock what you mentioned was Capri Global, right?
Yes.
Yeah. So looking at the chart for Capri Global on the monthly front, as you mentioned, yes, we have seen some buying action which has been coming around 650 zone. Again, we saw a correction over there, but there was steep buying which was seen around the same level of 650. So I think 650 is now a very good support. We are seeing constant buying from those levels as well. So the demand out at those levels are very high. So definitely an up move can be expected from the current levels as well. Currently trading somewhere around 707 rupees. So I think at the current levels or any dip if you get, definitely you can buy it. 650 would be a very good support. On the upside, I can expect the stock to test the levels of 750, 800 zone. Now this has been the zone where from the earlier selling has been coming in. So that is a resistance zone. But looking at the chart structure on a weekly and a monthly time frame, the trend looks quite positive, and we can expect the stock to go towards the levels of 750, 800 on the upside.
Okay. The third name also on our radar is from the broader markets. It's Brigade Enterprises. The news here is that they want to develop about 2.1 million square feet of residential apartments in Chennai. In fact, from the Chennai market, the company said that they're looking at a revenue of 6,000 crores over the next 5 years. So some encouraging commentary coming in from the management for the Chennai market for Brigade Enterprises. But if we look at the stock price last 3 months, it did, perform fairly well. It was looking fairly sturdy in the month of March when I think it was trading above that 500 levels. It cooled off a fair bit. It, breached that 400 mark on the downside back in May. But again, we're looking at a sort of a V shape getting formed on the chart pattern if we see the 3 month chart. What does that mean? And is this upward trajectory going to continue?
Karuna, if I talk about the reality space as a whole, we had seen reality when the bull run which started from 2020. Reality was one of the sector which had clearly outperformed. Now, what has happened in the reality space because of the inflation concern, because of the rising rates which have been happening over here, we have seen a cool off which has come in the reality space overall. Look, if I talk about Brigade Enterprise, the stock has been relatively outperforming vis-a-vis its reality counters over here. So I think for Brigade, it is still stuck in a broad range on a daily chart. If I talk about the 200 DMA, which is a trend change level, is placed around 466 zone. So I think if 466 level is taken out, that is where the trend will change for Brigade Enterprise. Currently, it is trading in a downtrend with lower high, lower low formation, which are still intact. Above 466, this trend will change and it will surpass its 200 DMA on the daily chart. From there onwards, we can see the momentum getting on the upside towards the levels of 520, 530. So these are the levels, resistance zone, which needs to be taken out for the stock to gain momentum again and touch the levels of 520, 530 on the upside.
Okay. I also want to flag off an FMCG, not just an FMCG stock, but several of them. They have once again bounced back to pre-pandemic levels, whether it's the like of Britannia, Marico, ITC, just to name a few. But overall, how is the FMCG pack looking? Because it has been a quiet performer, but it has been a steady one because now that the commodity prices are also falling off quite a bit, there seems to be some positive momentum building up. Do you see that across the board for FMCG stocks, or do you see some select names that one can keep on their radar?
See, Karuna, if I talk about the FMCG as a space, we have seen a massive sell-off. This was because of the inflation concerns what we are having. Now, if you look at on the global front, there are inflation concerns around the world, which definitely the organizations and the world economy will try to come down so that the inflation comes down over here. So specific measures will be taken there. What one thing is that market discounts everything earlier. So this was been discounted by the markets. Now going forward, whatever the news or outflow for the markets on the FMCG front will be coming, will be on the positive side, which the even chart is definitely showing. So on the Nifty FMCG index, if I talk about specific, there is a good base formation which is happening at the current levels. The stocks have seen a massive correction of 30-40% from their all-time high levels as well. So I think value buying is seen over there. The technicals are showing a lot of base formation happening at the lower levels as well. So I think it's a good mix what they are getting for the FMCG stocks as well. So definitely a good time to buy FMCG stocks. My preferred pick out of the FMCG space would be the street favorite ITC. Now ITC has seen a vis-a-vis opposite performance what we have seen at the current levels, where the stock has corrected on the FMCG space from 30 to 40%. Here is ITC showing us that the stock is trading near its all-time high levels. So this completely says the logic that in the bad times when the FMCGs were not doing good, it was ITC which was holding up. So when the times will change for the FMCG sector, which is going to happen going forward, I think ITC would be the leader in that. So I think definitely a good time to buy ITC at the current levels or at any dips. 250 is a very good support on the downside, and I can expect the stock to test its all-time high levels on the upside.
Okay, all right. Kunal, request you to stay on with us. I want to bring on board Amnish Aggarwal of Prabhudas Lilladher as well to take this conversation forward on the FMCG space. Amnish, definitely there has been a sentimental relief coming by with the easing of commodity prices. We've seen FMCG stocks do well in the recent past. Of course, it's largely in line with the overall market momentum as well. FMCG index had rallied 5% last week. There was hefty buying seen. Stocks like Britannia, ITC, Nestle, Marico, they're all quoting above pre-pandemic levels. Talk to us about the long-term story, the long-term fundamentals of FMCG space. If, say, investors want to buy right now, is it a good time? And moreover, are enough triggers in place to invest for the long term?
Okay, so Karunya, 2-3 things. First, it's not say the last month or two. If you look at say last 6 months or so, FMCG stocks have been sideways to weak because they were, you can say, getting continuously re-rated over the last at least 8 to 10 years. It was not only the profit growth, but the P multiples was, you can say, steadily going up. So with some of the other sectors which started doing well, the hopes on the economic revival and all, then the P multiples of the sector, they peaked out say 6 months back. Now that resulted in say much before the Russia-Ukraine war or this, you can say, the sharp increase in the raw materials, particularly in March. Yes, last year they were also going up. The stocks had gone into some sort of a corrective mode from the last say 6-8 months. Now in the current scenario, if you look at say the near term, yes, the raw material pressures are there. We will see 1Q margins broadly being under pressure, but as we all know, the FMCG companies, they usually take the price increases. Okay, so there is usually a time lag, but the margins actually come back. But here, interestingly, what is happening is that now globally with the central banks raising the interest rates, and there is a hope that the commodity prices will cool off. And in the current scenario where the price increases are happening and there is a hope of the commodity prices cooling off, there is a chance that in the second half of the year, not only due to low base in terms of margins, but also due to benign commodity prices, we might see a leg up in the profit margins of these companies. So that is one reason that people might be coming towards these stocks. If I look at say medium term kind of a scenario, yes, they had corrected. There has been some relief rally, but many of these stocks are being valued on DCF, and we have seen interest rates going up from 6 to nearly say 7 point, you can say 8 kind of you can say number. So the target prices are unlikely to move up. That is one. The second is that the kind of re-rating which used to happen earlier, so that is unlikely to happen, and many of these stocks, even after the correction or today, they are still trading at say 50 times, 55 times, 60 times FY24 earnings. So the earning support is not much there in many of these stocks. Has the correction being over? One can say that in the near term it is being over, But will they give you any superlative returns over the next 6 to 8 months? The answer is no. In fact, if you look at many of these stocks, for example, whether it is Britannia or Lever, from the last 3 years, the returns have been practically zero in many of these stocks. So I think one has to be very choosy, and one need not go overboard. But yes, definitely the things are looking better than what we were anticipating 2-3 months back. But somehow that is also getting factored very fast into the stock prices.
Okay, thanks for breaking it down for us in so much detail, Amnish. But what about the rural play? Most of, or rather many of these FMCG companies have significant exposure to the rural markets, and now with normal monsoon, again, hopes are building up of consumption pickup, especially in the hinterlands. At this point in time, should one at all look at this breakup of urban versus rural or consumer discretionary versus FMCG staples?
Okay, you see, as far as the rural demand is concerned, we were quite hopeful that the demand will start picking up from, say, the month of June itself, because of the main reason being that the crop prices were likely to be higher for the Rabi crop. I think the season started well, but intermittently there was ban on the wheat exports. But in general, farmers have made much more money this year, and they are much better placed. Similarly, dairy incomes are also higher. So as far as income is concerned, rural India is in a very good shape. However, if you look at, say, the near-term kind of a prospect, I think the recovery might still take a couple of months, because as of now, the monsoon is running significantly below normal. However, I think once the monsoon picks up and the sentiment improves, there is a fair probability that during the second half of the, you can say 2Q, or by the time we end 2Q, the rural demand should start reviving. Now, coming to your second part of the questions on discretionary as well as discretionary and staples, I think if you look at last 2-3 years, while staples have been doing reasonably well, discretionary segments have been on the receiving end, whether these are apparel, whether these are, you can say, apparel, footwear, retail, multiplexes, tourism, even QSRs in certain sense. So I think discretionary segments are the ones which will be posting much higher growth than what we have seen in the past 2-3 years. So in terms of numbers, in terms of growth, discretionaries will look much better than your staples over the next couple of years.
Okay, well, thank you so much, Amnish, for joining in and for bringing this clarity with respect to what's going on in the FMCG space and the trends that are likely to pan out. Let's get back to Kunal. Lots of queries as well lined up, so address them one by one. First post is from Aarti. She wants to know if it's a good time to buy Bajaj Finance, and she's looking at the short-term time horizon. Kunal, what is your sense?
Looking at the financial space, firstly, there are a lot of concerns regarding to the financial space at the current levels. If I specifically talk about Bajaj Finance, still the trend is in a downtrend. It is trading below its 200 DMA on the chart. We are still having a lower high, lower low formations which are intact. My ideal suggestion to go long on Bajaj Finance will be above the levels of 6,200. I think that is where the trend will change for Bajaj Finance. We will get some stability, and we can even see the stock heading towards 7,000, 7,200 kind of a level. So good upside could be seen from those levels. So at the current levels, the trend is still down. So I would not recommend to buy at the current levels.
Okay, so it's an avoid at the current level. The next query is from Kishore. He wants your advice on Airtel for the short term. And he said that there's a lot of resistance near 682 level. So if you can guide him accordingly for a good level to look at, for the short term. Bharti Airtel is, about still 100 rupees off from its April high. Which way do you think it's headed from here on?
I think if I talk about the entire telecom space, I think two stocks, only Reliance and Bharti Airtel, are the one which are showing some strength even in this weak market. If I talk about Bharti Airtel from the current levels, we are on the verge of a breakout from a downward trend. The stock was trading with a lower high, lower low formations, but now the trend is likely to change. And the level on the upside is at the level of 700. So once 700 is taken out on the upside, this downtrend will be over. And again, I can expect the stock to test the levels of 750, 760 on the upside. So a good 8 to 10% move one can get above the level of 700. Again, even if I talk about for the June expiry or for the July expiry, 700 call again is the strike on the option front as well, where we have seen significant amount of open interest built up. So probably since we are only 2 to 3 days away from the expiry, if 700 is taken out, there could be a huge short covering that could come in Bharti Airtel, and we can see significant upside on the stock as well. So I am conservatively very bullish on the stock from the current levels. A good level to buy around the levels of 700.
Okay, all right. One more query we have time to address. This is from Saket, and he wants to have your advice on jumble fertilizers. Typically around this time of the year when there's good commentary coming in for monsoons, rainfall, rural demand picking up, like Amnish was also just flagging off. Fertilizer stocks also do well, but unlike that trend, this time around jumble has in fact fallen a fair bit in the last 2-3 months. Talk to us about the technicals and what are the levels to watch.
See, I think this is a very interesting time for the fertilizer space as well. If I talk about the international fertilizer space as well, the fertilizer index is trading at an all-time high level on the global front. So I think that is going to help this fertilizer company going forward as well. Plus, we are starting to have a good monsoon. So I think that is a good news what we are getting on the fertilizer space overall. Specifically, if I talk about jumbo fertilizer, the stock had seen a massive run up on the upside, and now we have seen a very good correction as well. I think these are the times where fertilizer space could do well from a trading perspective as well. So Chambal fertilizer definitely remains on the buy side as well. 290 is a level which it should take out. From there onwards, we can see some good upside coming in Chambal fertilizer as well. Just to add on a perspective on the fertilizer space, I think GNFC, GSFC, Coromandel, I'm just more bullish on the fertilizer space, and Coromandel is one stock which one should look at on the fertilizer space. It is a stock where it is trading at a 52-week high level. The market is off almost 20% from the all-time high, and this is a stock which is trading at 52-week high. From the fertilizer space, positive news are coming in. The chart is showing a lot of strength. So my suggestion, if you want to go long on a fertilizer space or the index, then I think Coromandel is a stock which one should look at from the current levels.
Okay, all right. And what are the stocks that you have for our viewers? Two heavyweights on your radar?
Yeah, so we are having heavyweights on the radar over here. I think that is a space where one should see some safe margin of safety at the current volatility. So my first pick is L&T. Nifty Infra as a space have seen a good correction, and now base formation is happening on the lower end. So L&T is one stock which has formed a good base. Yesterday in a sideways market, the stock was up by 3%. It crossed its previous 5 days high, which clearly indicates a lot of strength in the stock, and it closed near the highest, near the high of the day, which clearly indicates the strength in the stock, and the momentum is likely to continue on the upside. So L&T is one stock which one can buy from the current levels. 1500 is a good support on the downside, and on the upside, I can expect levels of 1585 to 1595 coming in the current week only. So L&T is looking good on the chart perspective. Second is the IT space. Now, again, we have seen a massive sell-off in the IT space. This is because of the US effect, what we have had over here. Now, if you look at the USD INR, that is the currency effect, the currency has appreciated by 4 to 5% on the upside, around 78, 79. So whenever this currency depreciation which happens over here, it definitely benefits the IT sector, which we have not seen the performance in the stock over here. So I can see some relief rally that could come in the IT space as a whole. So Infosys is looking good at the current levels. One can buy Infosys. 1440 is a very strong support on the downside where I see for Infosys. And on the upside, it can test the levels of 1500 to 1516 on the upside. So L&T and Infosys, these are the two heavyweights which are looking good for the current week, where we can see some buying action coming throughout the week.
Okay then, Kunal, thank you so much for flagging those two stocks off to our viewers and also helping them out with their queries. That's all we have in this edition of Morning Trade, guys. But stay tuned to Money Control Markets with Santo, and CJ comes up next.